Good morning, good afternoon, depending on where you're connecting from. If you can hear me, please drop a comment. If you can hear me loud and clear, please drop a comment. You're welcome to tonight's session. You're welcome. If you can hear me loud and clear, please drop a comment. Drop a comment if you can hear me loud and clear. You're welcome, you're welcome, you're welcome. We are starting the class in a few minutes. If you can hear me loud and clear, please drop a comment. Please drop a comment if you can hear me loud and clear. Also confirm you can see my screen. Hope you had a great day. Confirm you can hear me loud and clear. Confirm you can hear me loud and clear. Confirm you can hear me loud and clear. You're welcome, you're welcome, you're welcome, you're welcome. I'm so excited to have you in tonight's session. Confirm you can hear me loud and clear. Confirm you can hear me loud and clear. Waiting for others to join the class. Please exercise patience. We're waiting for others to join the class. Mr. Joseph, this class isn't for you. This class is for beginners. Okay, Mr. Joseph, this class is for beginners. How are you doing? You guys are supposed to be taking this beginner class. You guys are supposed to be taking this beginner class. I'm not supposed to be doing this. How was your week? How was your week? Confirm you can hear me. Drop a comment. Drop a comment. I want to be sure you can hear me loud and clear. Mr. Joseph, how was your week? How was your week, Mr. Joseph? How was your week, Mr. Joseph? If you have joined this class, do drop a comment. Drop a comment. Can you hear me? Confirm you can hear me. I think everything is okay now. If my sound is okay, I've been trying to fix my sound. I think everything is okay now. Don't worry, very soon. Very soon. Very soon. Yeah, the students. Where are the students? Where are the students? Where are they? Where are they? If you can hear me loud and clear, drop a comment. Drop a comment. If you can hear me loud and clear, please, Mr. Joseph, confirm there is no noise in the background. Confirm there is no noise in the background. Please confirm there is no noise in the background. So you all are welcome to tonight's class. This class will be an introductory class to forex trading. To be an introductory class to forex trading. In today's class, we'll be looking at what is forex trading and how you can earn extra income trading forex. I have no doubt that 70% of those of you in this class have heard about forex. I believe you've heard about how participating in the forex market has changed the lives of so many. And also, you must have had the bad side of trading. Okay, how many have lost money trading in the forex market? Yes, it is true that a lot of people are losing money trading in the forex market, and the major reason for that is the lack of knowledge. Okay, so today I will be introducing you to the forex market. I will be showing you the right way to trade the market. You need the right information to excel in trading. 90% of those who participate in the forex market are gamblers. Most of them don't have the basic knowledge. They don't have the right information required to excel in the forex market, and that is why they keep failing. Now, why should you listen to me? Why should you listen to me? I have been trading the forex market for over 10 years now. I have over 10 years of trading experience, and I've been through the ups and downs of trading. I've lost money in the market, and I've made so much money in the market. And I think that gives me the right to teach you how you can excel in the forex market. There's a saying that someone who has been through hell can get you out of hell. I've been through it all in forex trading. And the major reason I failed in trading when I started trading, the major reason I failed in trading was because I lacked the right information. I had no mentor. I had no one to show me the right way to consistent profitability in the market. And I don't want you to go through the pain that I went through because lack of knowledge cost me time and money. It cost me time and money. I don't want you to waste your time learning how to become successful in trading, okay? And I don't want you to waste money. It costs so much to access quality forex education. And I know most of you might not be able to afford the exorbitant fees being charged by forex coaches and mentors. And that is why we put together this training to teach you for free how you can become successful at trading. Can you all hear me? If you can hear me, drop a comment. Drop a comment if you can hear me. Drop a comment. Drop a comment. So today we'll be looking at what is Forex trading. How can you make money from the Forex market? Is it possible to make a living from the Forex market? Yes, it is very possible. Like I said, trading is what I do for a living. Okay, trading is what I do for a living. So it is very possible to make a living from trading, but you need to equip yourself with the right information. You need to know the right way to trade. So what is Forex trading? Like I said, most of you have heard about Forex. You've heard about Forex. It's not new to 90 to 95% of you in this class. You've heard about Forex trading. Now, what is Forex? What is Forex trading? What is Forex trading? Now, the word Forex is an abbreviated word from the two word foreign exchange. The word Forex is an abbreviated word from the two word foreign exchange. Now, what is foreign exchange? Foreign exchange is also referred to as international trade. International trade. Now, what is foreign exchange? Foreign exchange is the exchange of goods and services between two countries. Foreign exchange is the exchange of goods and services between two countries. And when two countries are involved in exchange of goods and services, it is mandatory for these two countries involved in this transaction to trade their currencies. For example, if I want to import a car from the United States to Nigeria, I would have to trade my naira against the dollar. Or if I decide to relocate to the United States today, I would have to trade my naira against the dollar because the accepted currency in the United States is the dollar. I cannot spend the naira in the United States. So for me to be able to buy and sell in the United States, I would have to trade my naira against the dollar. I would have to sell my naira to buy the dollar. These are examples of forex transactions. So in the forex market, what we do is buy and sell currencies. We buy and sell currencies. So our products in the market is currencies. That is what is being traded in the forex market. Currencies. So forex trading, like I said, if I'm traveling to the United States, I need to sell my naira to buy the dollar. Okay, so forex trading is the simultaneous buying and selling of various countries' currency. In every forex transaction, you're doing two things at the same time. You are buying one currency and at the same time you're selling the other currency. In every forex transaction, you would buy one currency, you would sell the other currency. So for example, if I want to travel to the United States, I'm going to trade my Naira, NGN, against the United States dollar. Now, this is called a currency pair. In a currency pair, you have two currencies. This is called a currency pair. Currencies are traded in pairs. And in a currency pair, you have two currency. Example of a currency pair is the NGN against the United States dollar. Another example of a currency pair is the euro against the United States dollar. Another example of a currency pair is the GBP against the dollar. This is Great Britain pounds against the dollar. So currencies are traded in pairs. And like I said, what we trade in the market is currencies, and there are 8 major currencies that can be traded in the market. It's not all the currencies in the world that can be traded in the market. For example, the naira cannot be traded in the online currency markets. The naira cannot be traded in the online currency market, but it can be traded in the local market, which is the offline forex market. For example, if I want to travel abroad, I will need to approach the aboki or go to the Bureau de change to trade my naira against the dollar. That is the offline forex market. What I'm teaching you is how you can earn trading currencies online. Okay, so there are 8 major currencies that can be traded in the market. There are 8 major currencies that can be traded in the market. What are these 8 major currencies? Euro, US dollar, GBP, New Zealand dollar, Australian dollar, Japanese yen, Swiss franc, which is CHF, and I think the Canadian dollar. These are the 8 major currencies that can be traded in the market. Now, these currencies are currencies of developed country, and these currencies are the currencies that are mostly used in online transaction, in international trades. These are the major currencies. That's why they are referred to as the major currencies. These currencies, the demand for these currencies are very high. They are very high. That is why they are referred to as what? The major currencies. Okay, so these are the 8 major currencies that can be traded in the market. And like I said earlier, currencies are traded in pairs. And there are 7 major currency pairs. Okay, we have 3 types of currency pairs, but there are 7 major currency pairs. We have 3 types of currency pairs. We have the major currency pairs, we have the cross currency pairs, and we have the minor currency pairs, or sometimes referred to as exotic pairs. I believe you all can hear me. Okay, so we have the major currency pairs. We have, please drop a comment. I want to be sure you guys can hear me loud and clear. I want to be sure you guys can hear me loud and clear. Please drop a comment if you can hear me. Just type value, value. Just type value if you can hear me. Type value if you can hear me. So we have major currency pairs, we have cross currency pair, and we have minor currency pair. You see them on the chart. Let me show you the chart. Okay, I'm going to talk about this trading platform later on. I'm going to talk about this trading platform. Now, if you go to the market watch window, you would see all the currency pairs that can be traded in the market. The forex market is also referred to as over-the-counter market. Every transaction is done online. Every buying and selling is done online. As a forex trader, as an online forex trader, you don't need an office to operate your business. This is one of the advantages of trading forex. You don't need an office to operate your business. Every transaction is done online. All you need is just a trading account and access to this trading platform. This is where all your transaction will be done. You don't need an office to participate in the forex market. All you need is an account that you have to open with a forex broker, just the same way you open an account with a bank. Okay, you need to open an account with a forex broker. I'm going to talk about who a forex broker is, why it is important that you open an account with a forex broker. I'm going to talk about that as we progress. Okay, so you can see here we have list of currency pairs that you can trade in the market. You can see these are list of currency pairs. You have the major, you have the cross currency pairs, and you have the minor currency pairs. Now, what is a major currency pairs? Why are they referred to as major currency pairs? A major currency pair, or a pair, is said to be a major currency pair when you trade one of these major currencies against the dollar. A pair is said to be a major currency pair when you trade one of these major currencies against the dollar. So an example of a major currency pair is Euro USD, GBP USD, Australian dollar USD, USD CHF, USD CAD, USD Japanese yen. Okay, so there are seven major currency pair. Then we have the New Zealand USD. These are the seven major currency pair. You can see that on these major pairs, the dollar is being traded on these major pairs. You can see that the dollar is being traded on these major pairs. That is why they are referred to as major currency pair. You must have heard the word that dollar is the king, right? Dollar is the king. So when you trade dollar against any of these major currency pair, they are referred to as what? A major currency pair. I hope that is clear. If you have any question, please just type it in the comment section. Drop it in the comment section. I will attend to it before the end of the class. If you have any question, just type it in the comment section. I would attend to it before the end of the class. Okay, so these are the seven major currencies that can be traded in the market, and we have what we call cross currency pair. What is a cross currency pair? A pair is said to be a cross when you trade one of the major currencies. Let me go back here. When you trade one of the major currencies against another major currency except the dollar. When you trade one of the major currencies here against another major currency except the dollar, that pair is said to be what? A cross currency pair. Example of a cross currency pair is Euro JPY. Euro JPY, GBP JPY, Euro CAD, Aussie JPY, CHF JPY, Aussie New Zealand, Euro New Zealand. Okay, these are examples of cross currency pairs. You can see that on all these pairs, the dollar is not being traded. The dollar is not being traded, but a major currency is paired against another major currency. That is why it is referred to as what? A cross currency pair. Then we have minor pairs, or sometimes referred to as exotic pairs. When you trade a major currency against currencies of emerging economy, developing countries, that pair is said to be a minor or exotic pairs. Currencies of developing countries. Examples of currencies of developing countries. We have the Singapore dollar, we have South African rand, we have Norwegian krone, we have Swedish krona. These are examples of currencies of developing countries. Okay, so when you trade one of the majors here against those currencies, they are referred to as what? Exotic pairs. Example, if you trade euro against NOK, that is Norwegian krone, that is an exotic pair or minor pair. If you trade United States dollar against the Singapore dollar, that is a minor pair. If you trade euro, or let me say GBP, against South African rand, which is ZAR, that is an exotic pair. If you trade it against the Swedish krona, let's say you trade USD against SWK. Yeah, I think that's the abbreviation for Swedish krona. These are examples of exotic. These are examples of what? Exotic pairs. I hope you all are following. These are examples of what? Exotic pairs. And that is what you have on the market watch window. You can see the first 6 currency pairs listed here are the major currency pairs. And we have cross currency, Euro GBP, Euro Australian dollar, Euro CHF, Euro JPY, GBP CHF, CAD JPY. All these are crosses. Then I talked about the exotic pairs. You can see Australian dollar against Singapore dollar. euro against Norwegian krone, euro against Polish zloty, and then you have euro against Swedish krona is SEK. Then you have euro against South African rand. You have euro against Turkish lira. All these are examples of exotic pairs. So on this list, you have major currency pairs, you have minor, and you have cross currency pairs. I hope you all are following. Now, on a currency pair, like I said earlier, you have two currencies on a currency pair. There's what we call the base currency, and there's what we call the counter currency. We have the base currency. Can you all still hear me? Can you all still hear me? Can you still hear me? Can you still hear me? Sorry for that break. It was due to poor network. Confirm you can hear me loud and clear now. Confirm you can hear me loud and clear. Please confirm you can hear me loud and clear. So as I was saying, as a trader, you must be able to identify the base currency and the counter currency. And like I said, the first currency is the base and the second currency is the counter. So on USD CHF, the base currency is US United States dollar and the counter currency is CHF. On GBP USD, the base is Great Britain pounds, then the counter is United States dollar. On Euro USD, the base is Euro and the counter is United States dollar. On USD JPY, the base is United States dollar and the counter is Japanese yen. Now, there are basically three things you need to know to be a successful trader. Just three things you need to know to be a profitable trader. Now, but before I talk about those three things that you need to know to become a successful trader, I want to talk about the tools. I should have talked about that before now. The tools you need to start trading Forex. What are the tools? You need to know the tools you need to start trading. First is quality education, which you're going to get from us. Okay, you're going to get that for free. Quality Forex education is required for successful trading. Then you need a laptop or a phone. a laptop or a mobile phone. Then you need internet, and you need the trading platform, which you would get after opening an account with a forex broker. You would have access to the trading platform. Then you need capital. You need funds. Forex trading is a business, and for you to start this business, you need capital to get started. So these are the things you need to kickstart your forex trading business. The most important of all these tools is the education. It is the education. If you acquire every other tools without the proper education, you could lose all. You could lose all your investment on those other tools if you don't have the right knowledge. If you don't have the right knowledge, you will lose. You might lose every other tool. Okay, so it's important that you focus more. You give more attention to your education, to your trading education. Before you go for laptop, before you go for capital, go for education first. And that we are offering to you for free. And I know here in the part of the world, when things are offered for free, most people don't appreciate it. Some of the things I'm sharing with you now, some persons paid me thousands of naira to access it. This basic information I'm sharing with you, some persons paid thousands of naira to access it. But you are getting it for free, and I would employ that you don't take it for granted. Don't take it for granted. Okay, so I talked about the base, the counter currency. Now I said there are three basic things you need to know to become a profitable trader. And what are these things? It's very simple. What are these things you need to know? It is very simple. Three things you need to know. Okay, three things you need to know. First thing, as a trader, you must be good at analyzing the market. You must be good at what we call market analysis. And the essence of market analysis is to know the trend of the market. That is the purpose for market analysis. To know the trend of the market, to know the risk involved on that trade, and also to know the reward, how much you can earn on that trade. These are the three basic things you need to know to achieve success in trading. Before you execute a trade, before you open your platform to execute a trade, this is where we execute trade. This is the button we use in executing trade. You click on this new order. Before you come here to click on buy or sell, you can see the buy and sell button. Before you click sell or buy, you must have analyzed the market, and the analysis, technical analysis or market analysis, is done on this chart, this platform. It is done on this platform. That is why you have this platform. The essence of this platform is for market analysis and trade execution. That is why this platform was developed or was created, was made available to retail traders so that you can analyze the market and also be able to execute your trades. That is why you need this platform. If you don't have this platform, you cannot trade Forex. And you only have access to this platform after registering an account with a broker. The broker I work with is Oral Market, and that is the broker I would recommend you open an account with. Okay, open an account with Oral Markets, and you could open a demo account or you open a live account and you start trading. Okay, there are two types of accounts you can open with a broker. You can start with a demo account. If you are new to trading, you are advised to start with a demo account. Demo account is also referred to as a practice account. Since you are not an experienced trader, you are not expected to go live. You are expected to start with a demo account. Okay, whatever strategy you want to apply on a live account, you are expected to try it, apply it on a demo account. You're only expected to start live trading if your strategy is profitable on a demo account. If your strategy is not profitable on a demo account, you are not expected to start a live account. So you have the demo account, you have the live account. On a demo account, that's where you learn your strategy, you perfect whatever needs to be perfected on your demo account. Also, you get yourself familiarized with the trading platform. Okay, you know how to place your indicators, you know how to execute trade, you know what are the different time frames that you can trade with. Okay, you know how to log in into your trading account. So all these things you need to know, and you wouldn't learn these things on a live account. You learn them on a demo account. That is why it is important that you start trading on a demo account. Okay, you start trading on a demo account. So, like I said, you need to know the trend of the market, and that is possible through market analysis. And the market trend, there are three types of trend. Okay, there are three types of trend. Price moves in three directions. Price moves in three directions. It's either going up, down, or sideways. Price moves in three directions. It's either price is going up, going down, or sideways. So the word we use in defining an upward trend is bullish. When price is going up, we use the word bullish to mean price is going up. When price is going down, we use the word bearish to mean price is dropping. And when price is neither bullish or bearish, we use the word sideways or consolidation phase. We use the word sideways or ranging market. I hope you are following. We use the word sideways, consolidation, or ranging market to mean that the trend is neither bullish nor bearish. So how do you know when a trend is bullish and when a trend is bearish? How do you know a trend is bullish or bearish? Can you guys still hear me? Sorry, the network seems to be slow. I'm really sorry for that. But I want to believe you guys can hear me. I want to believe you guys can hear me. So we have three types of trend: bullish, bearish. So how do you know when a trend is bullish and when a trend is bearish? Now there are two major ways to know that a trend is bullish or bearish. Two major ways. Okay. One of the ways to know the trend of the market is what we call technical analysis. Technical analysis. And the second way to know the trend of the market is fundamental analysis. Fundamental analysis. Price is either going up, down, or sideways. Now, the question is, why is price not static? Why is it always, moving up and down? It's constantly changing. The exchange rates of currencies, the value of currencies is constantly changing. What is the reason for that fluctuation, that constant fluctuation? What is the reason for that constant fluctuation? For example, if you look at the charts now, if you look at the market watch window, you'll see that the price is constantly moving. The market opens on Sunday, 10 p.m. Nigerian time, and once it's open, price just keeps moving. Every second, every minute, the exchange rate is just changing. What is the reason for that? Today, you buy the exchange rate of naira to dollar. Anytime I want to sell my dollar, I need to call the aboki to know the exchange rate, and the rate is always changing. The rate you buy it, if you buy dollar or you sell your dollar 1,600 now, in the next 1 hour when you call, they might tell you the rate has changed from 16 to 17 or 16 to 1650. What's the reason for that constant fluctuation of exchange rate or constant fluctuation of prices? It is the forces of demand and supply. It is the forces of what? Demand and supply. Like they say, for an object to move from a position of rest, there has to be a force, right? For an object to move from a position of rest, there has to be a force. Same thing applies to price. For price to move from point A to point B, there has to be a force. And that forces are the forces of supply and demand. If the demand, for the demand of this water bottle, this water to go up, there has to be a high demand. There has to be a high demand. And what will make demand increase? It is when the price of this water bottle decreases. Are you guys with me? It is when the price of this water bottle decreases, demand will go up. If the price of this water goes up, if the price goes up, what will happen? The demand would drop. And when the demand drops, what will happen? What will happen if the demand drops? Price will drop. Sorry, if the price goes up, the demand will drop. The demand for the product, for this water bottle will drop. But if price drops, the demand will go up. Same thing applies in trading currencies. When the demand for a currency increases, the price will go up. And when the demand for that currency drops, that currency will lose value. For example, if you're trading the naira against the let's use USD against Japanese yen, JPY. If there is more demand for the dollar, if there is more demand for dollar, what will happen? Price will go up. If the demand for dollar is higher than the demand for Japanese yen, dollar will gain value, Japanese yen will lose value. Same thing applies if the demand for Japanese yen is higher than that of the dollar, the value of the Japanese yen will go up and the dollar will lose value. So it's the forces of demand that determines if a country's currency will gain value against another country's currency. So as a trader, you must be able to identify what we call demand and supply levels in the market. You must be able to identify demand and supply level, which is sometimes referred to as resistance and support level in the market. You must be able to know when a trend is about to change from bearish to bullish or from bullish to bearish. For example, today I took a trade on Euro USD. Let's look at Euro USD chart. I bought Euro USD today. Okay, this is the Euro USD chart. I bought Euro USD from this point, from this price. Can you see the price here? It is 1.1213. I bought it from this price and I exited the trade at this point. This was where I exited the trade. Let me change the color so that you can see the price clearly. So I took a buy. Okay, I believe you can see the price clearly now. I took a trade from this point. So this is how we make profits in the market. We buy a currency when we think or when we feel that the value is low. When we think the currency is cheap, that is when we buy it. So you buy a currency when you feel it is cheap and you sell when the price goes up. That is how we make money in the market. You buy at a lower rate and sell at a higher rate. So I bought from this point, I bought Euro USD at 1.1213 and I closed it at 1.1286. That is about 73 pips profit that was made in the market buying Euro USD. I bought Euro USD from this point, 1.1213, 1.1213. I bought at this price and I sold it at 1.1286. 1.1286. Now the difference between the buying price and the selling price is my profit. And if you subtract this from this, the difference I think is 73 pips. 73 pips. Pip is the unit we use in measuring price movement. Okay, pips is the unit we use in measuring price movement. Pips, the full meaning of pips, this is an abbreviation. This pips is an abbreviation for percentage in point. So on this Euro USD trade, I made 73 pips. 73 pips. And why did I execute the trade? Because I saw a pattern on the chart. If you go to 1 hour time frame, these are the things we're going to teach you. Okay, we're going to teach you how to identify these patterns on the chart. So I saw this pattern on the chart. We call this an hammer. On a 1 hour time frame, I saw this pattern on the chart, and this pattern indicates that the trend is going to change from sell to buy. That's what this hammer candlestick pattern indicates. Whenever you see this pattern, you know that the trend is about to change from bearish to bullish. For example, we have this. This is called a shooting star. This is called a shooting star. And when you see a shooting star, it indicates that the trend is about to change from bullish to bearish. And you can see after the formation of this pattern, what can you see? What's been happening in the market? You can see that the price has been dropping. This tells me, this candlestick tells me that there is more supply than demand. This tells me that there is more demand than supply. And when there is more demand than supply, price is expected to go up. And when there's more supply than demand, price is expected to drop. So we'll be teaching you how to identify these patterns on the chart, because these patterns always repeat themselves. They always repeat themselves. That is what technical analysis is all about. As a technical trader, you have to know history of price, what price has done in the past. So what we do as technical trader is to use what price has done in the past, the history of price, to predict what it will do in the future. As technical analysts, we believe that history would always repeat itself. So for you to be a very good technical analyst, you need to spend time on this chart. You need to spend time on this chart. You need to study the history of price. What has price done in the past? Okay, look, let me show you an example of what I'm saying. Let me show you on the chart. Let me show you on the chart. Okay, let me show you. When we say history repeats itself in the market, let me show you. Let me go on the daily time frame. I'll show you that. Okay, let me show you this. Let me show you this. Let me show you this. Okay, you can see this. Can you see this? When price dropped to this level at this point, what happened? It went up. Can you see that? It went back up. And what happened from this point? If you go back here, see what happened here. Price don't just drop or go up. There's a reason for every reversal. So you can see at this point what happened. Price dropped. And we had a pattern here which we call a shooting star. Okay, so price dropped at this point. And what happened? When price got to that level in the future, what happened? When price got to that level in the future, you can see it dropped from that level and it dropped back to this level. You can see this price dropped back to this level, and from this level, what happened? It went back up, and when it got to this level, what happened? It retraced. Price dropped. You can see history repeating itself. Look at what played out here. Also, let me point this out. Can you see this? At this point, what happened? Price dropped. Can you see? Price dropped from this point. Look at what played out here in the future. Price came back, tested this level, which we call resistance level, and what happened? It collapsed. Price dropped from that level. Can you see that? Before it broke out from that level, it respected that level by retracing. Can you see that? There are several more examples I can show you on the charts. to let you know that price repeats itself. Look at what played out here. At this point, price came, tested this level, created what we call a resistance level. And what happened in the future? Price retraced back to that level and respected that level. You can see this is an example of history repeating itself. What has happened in the past has a higher probability of repeating itself in the future. So you can see when price pulled back to this level, this resistance level, or you call it your supply level, what happened? Price dropped from that area. Let me show you more example. You can see this also. This is an example also. You can see we had a support here. A support was created here. And what happened? Price came back here. You can see tested this support level. Can you see? And what happened after price tested this support level? You can see price went back up. It respected this level. Can you see that? So as a trader, these are the things you need to study. You need to know what price has done in the past. If you know what price has done in the past, you'll be able to predict what it could do in the future. You could be able to predict what it will do in the future compared to someone who doesn't have an idea of what price has done in the past. That's what differentiates a profitable trader, a consistently profitable trader, from an inexperienced trader. A profitable trader has studied the market, he's got years of experience, he knows what price has done in the past, and is able to predict. Yes, he won't be right all the time. He won't get the direction right 100% of the time. No trader would get the direction right 100% of the time. But if you're a good trader, you should be able to predict the market to some degree. At least if you make 10 predictions, you should be able to win at least 6. You should be able to at least get 6 out of 10 right. If you're able to get 6 out of 10, then you will be a very a profitable trader. No trader gets it right all the time. Okay? No trader gets it right all the time. Okay? So you need to study what we call technical analysis, and it is done on this chart. We'll teach you that. I won't be able to cover that in today's session. Like I said, today's session is just an introductory class. Okay, so I won't be teaching you strategies. Okay, I'm just sharing with you the ways you can know the trend of the market, the ways to know when a trend is about to end and when a new trend is about to start. Okay, so we'll introduce you to candlestick patterns, we'll introduce you to resistance and support strategy. Okay, we'll introduce you to support and resistance strategy, and we'll introduce you to some indicators. Though I don't recommend indicators, but as newbies, sometimes you have to start with indicators as a newbie. Okay, you might have to start with some indicators. Okay, so we'll be introducing some indicators that you can use in analyzing the market. Like I said, I don't want any of you to lose your money in the market, and that's the reason I decided to teach people how to trade. I lost money. I lost money because there was no one to guide me. There was no one to guide me, and I made up my mind that I make it a priority that now that I'm successful, I should be able to guide others. I should be able to guide others to ensure that they don't make the same silly mistakes that I made when I started this journey. Okay, so technical analysis. And the second way, like I said, to know the trend of the market, to define the trend of the market, is fundamental analysis. Now, what is fundamental analysis? Fundamental analysis involves the use of economic events to determine the trend of the market, to determine what price will do in the future. That is what fundamental analysis entails. A technical analysis involves the use of price action, what price has done in the past to predict the future. That is technical analysis. Technical analysis, you are using price action strategies, you are using indicators to define the trend of the market. But when it comes to fundamental analysis, you're looking at what is happening in the economy to determine the value of the future value of the currency of that country. Okay, and some of the indicators we use, economic indicators we use in determining the trend of the market or the future value of a currency of a country, some of them are We make use of inflation rate. Inflation rate. We make use of inflation rate. We use unemployment rate. Unemployment rate. We look at the gross GDP, gross domestic product. We look at interest rate. Interest rate. Okay, these are some of the major economic indicators we use in defining the trend of the market: inflation, unemployment, gross domestic product, interest rates. We also use politics. Okay, politics. Okay, these are some of the economic indicators. For example, if a country's inflation is high, you would expect the currency, the value of the currency of that country to drop. If inflation rate is high, it has a negative impact on the economy, which will reflect in the value of that country's currency. So, for example, when you compare the inflation rate in Nigeria compared to the United States, you would agree with me the inflation rate in Nigeria is higher than that of the United States. What that means is that the United States dollar will gain value than the naira. That's what it means. Another economic indicator is unemployment rate. If unemployment rate is high in a country, it will have a negative impact because it is when people have jobs, they have money to spend. And when people have money to spend, businesses will boom. But when the rate of unemployment is high, there will be no money to spend, and it will have a negative effect on businesses. Okay, businesses won't do well, and it will have a negative impact on the economy. So compare unemployment rates in Nigeria compared to the United States. Unemployment rate in Nigeria is higher than that of the United States. That tells you that the naira will lose value against the dollar. Another economic indicator we look at is the gross domestic product. Gross domestic product. When your import is higher than the export, it will have a negative impact. For example, Nigeria is a consumer nation. We import than we export. We import than we export. So our GDP is low compared to the United States. Interest rate, if interest rate is high, if interest rate of an economy is high, it attracts foreign investor. If the interest rate is low, it discourages foreign investment. Okay, it discourages foreign investment. And for an economy to boom, you need foreign investors. For an economy to boom, you need foreign investors. Okay, now the interest rate in Nigeria compared to the United States, I think the interest rate in Nigeria is lower, is less compared to the United States. And when you consider a lot of other things that are happening in the economy, kidnapping, terrorism, that won't encourage foreign investment. It won't encourage foreign investment, and that is having a negative impact on the economy, and it's affecting the value of the naira. So terrorism is also one of the economic indicators that can be used to determine if a country's currency will gain value or lose value. Then politics, when your policies are unstable, it affects the economy. It has a negative impact on the economy. And that's one of the things that is affecting the Nigerian economy. Okay, so that's what fundamental analysis entails. Okay, that's what it entails, and we do check for these data. Okay, as a fundamental trader, you need to know how to read what we have on forexfactory.com. Forex Factory is a calendar. It's a calendar where news that is being released or news that has been expected from the various countries on a daily basis, on a weekly basis, on a monthly basis is being listed. Okay, and that you will find on forexfactory.com. So today is Friday, May 9th, and these were the news, the major news that was released today. We only got news from Great Britain and also Canada. Those are the two countries that we received or major news were released from today. We have GBP, we have Great Britain pounds and Canadian dollar. Okay, so for Canada, employment change for Canada was released today. And you can see we have three values here we work with. We have the previous, we have the forecast, and we have the actual. Then we have unemployment rate that was released from Canada, 6.9, 6.8 was the previous, so was the forecast, and the previous was 6.7. So you can see that it's in red. It's in red, which indicates that the actual is less than the forecast. Okay, the actual is less than the forecast. Okay, so this is higher than the forecast. The previous was 6.8. So unemployment rate increased from 6.8 to 6.9. That's negative for the economy. That's negative for CAD. Then for employment change, it was 7.4 and the forecast was 4.1. So it's in green because it is positive for CAD. Okay, so fundamental analysis is done using the information on this platform, on this chart, on this website, forexfactory.com. We also have investing.com. Okay, so as a trader who wants to be profitable, you must know how to do what we call technical analysis and fundamental analysis. Okay, so like I said, I wouldn't be teaching on strategy. I won't be talking on strategy in today's session. Most likely, we'll have a session for strategy tomorrow by 8 p.m. Okay, by 8 p.m. we'll spend close to an hour in this session, and I would want us to end this class at this point. But before I do, I'd like to take your questions. If you have any question, please drop it in the comment section. I'm sorry for the breaks. It's due to poor network. I'm really sorry for the breaks. It's due to poor network. It's due to poor network. If you have any question, let me know in the comment section. If you have any question, let me know in the comment section. If you have any question, let me know in the comment section. And if you're joining the strategy session, let me know in the comment section. Any question, any question. We have just 5 more minutes. I'm going to be taking your questions in the next 5 minutes. So please drop your questions. If you have any question, please drop it. If you have any question, let me know in the comment section. If you got value from the session, let me know. Let me know. If there's anything you think we need to improve on, that needs to be improved on, please let me know in the comment section. If you got value, let me know in the comment section. Give the video a thumbs up. Give it a thumbs up if you haven't done that. And if this is your first time joining our class, please subscribe to the channel so that anytime I come on live, you get notified by YouTube. If you have any question, let me know in the comment section. Any question? Do you have any question? Any question? Any question? So it appears there are no questions. Okay, it appears there are no questions. I want to appreciate every one of you who participated in today's class. I I want to believe you got value from the class. The replay will be available immediately after the class. You can always access the replay. Okay, if you have any question, you can reach out to me. Okay, my number is 080-378-36189. Okay, if you have any questions, you can forward me a message on WhatsApp via 080-378-36189. Thank you. I wish you all a wonderful night.